If you're in the market to buy a home right now and you want to be in a cash buyer scenario situation where we're making you a cash buyer, or if you know that you want to sell your home and purchase a home, but you're afraid to put your home on the market and sell it before you're able to find your next home, you definitely want to watch this video. We've got some great tips and some awesome options for you that you can choose from that I think will be very helpful in this crazy market that we're in right now. All right, guys. So I wanted to welcome, we've got Jen Conroy, and she is our senior client advisor from Seacoast Bank. And we also have Tony Burns. He is the banking center manager with Seacoast Bank. So I so greatly appreciate you guys joining us today.
Yeah, thanks for having me, Brandie.
So I wanted for us to be able to get together and really just kind of tap into your guys' expertise because, as you know, right now the market is so extremely hot right now. And buyers are really finding it very difficult to really have a competitive edge, first and foremost, in these multiple offer situations that we're facing. In conjunction with that, we have a lot of people that they know that they want to sell their home, and yet they don't want to get their home under contract and sold without knowing that they have a great home that they want to move into. And so it's kind of a unique dynamic. And so I wanted to, check in with you guys today, as I know that you guys have a couple of different loan options that people might be able to benefit from. And so we're going to be talking a little bit about bridge loans and HELOCs. Is that okay?
Yeah, perfect.
Awesome. So let's go ahead and start off with the bridge loans. So if you don't mind, explain to us in like layman's terms, what is a bridge loan and when would you want to consider using it?
Yeah, so that's a great question. I think traditionally, when people were selling a home to buy a new home, they would have to actually sell the home. Lots of times there was contingencies on selling the first property in order to buy the second property because either they needed that equity or cash to purchase the additional home. With a bridge loan, basically what happens is you get a loan on the existing property. That loan is a 12-month term. So essentially you've got 12 months to sell the existing home that you're in, and you could use those funds ahead of time to purchase the new home. So it gives the seller a little bit of an advantage because lots of times what would happen is they would sell their home so quickly and they wouldn't be able to find a home that they were really in love with. And then they would have to either live with somebody or rent or come up with other means, write it into the existing contract, and then rent their home back from the new buyer in order to kind of get this deal all in place. But with the bridge loan, you're essentially using the money that you're anticipating from the sale of the home to purchase the new home. Does that make sense?
Yeah. And so in a bridge loan situation, how much equity can somebody pull from that, from their existing home?
Yeah, with us, we'll allow you to pull 75% out, 75% of the equity out of the home to purchase the new home.
Okay, so this would really be a scenario that would be perfect if someone either owned their home outright and didn't have a mortgage, or they had enough equity to be able to pull out that would allow them to, in essence, be a cash buyer, right? By doing the bridge loan on their next purchase. They, if I'm not mistaken, they would not be able to use the bridge loan and do a mortgage as well on their purchase.
That is correct.
Okay.
Yeah. So, for example, if you had $1 million property, we'd allow you to pull $750,000 out to purchase that new property. So it would be a $750,000 loan. They could use the $750,000 to purchase the new property. If they were going to buy $1 million property and they only got $750,000, they would have to use $250,000 of their own cash.
Okay.
So they would have to have cash reserves.
Okay, so that just for clarification, they cannot get any other additional loans on the purchase when they're using a bridge loan, correct?
That is correct. Yes.
Okay, perfect. And so if you use a bridge loan to purchase a new home, how long is the term of the bridge loan? Again, I think you said it was a
Yeah.
year.
So our expectation is 12 months.
12 months. Okay.
12 months.
All right. So in essence, let's just kind of like roll through a scenario. Let's say that Bob and Sue, they own their home. It's worth $1 million. You're willing to give them $750,000. They are not having to put their current home on the market because you're able to give them the bridge loan. That then allows us to be able to go out and find the perfect home for them in their timing. And it also enables them to, in essence, become a cash buyer, which makes their offer a much stronger offer than all of the other offers that either have a home sale contingency or if they, if they have a financing contingency. So it makes them a really strong buyer. They can then move forward with the purchase of that home, close on it, and then they would have then the effective time needed to then successfully put their home on the market, move, and get everything all squared away. And then when they close on their home, then in essence, they're paying off the bridge loan.
That is correct.
And then they have, if there's any proceeds remaining, then that is their funds.
That goes into their pocket.
Correct.
Yes. Perfect. So what do the interest rates look like? I know that might fluctuate from time to time, but currently right now, what would it look like if someone was to do a bridge loan?
Yeah, so it's dependent on credit, and it is tied to prime on a variable rate. So right now, prime is at 3.25. So we'd be looking at, decent credit. You'd be looking at like prime +1, but it could fluctuate a little bit based upon credit criteria.
Okay, all right. And so tell us a little bit about time frame. Like if someone wants to do this and they want to take advantage of that, from the time that they call your office to the time that they're able to have access to the proceeds, what does that look like?
So I think a general rule of thumb, probably plus or minus 4 weeks from start to finish, and that would include your appraisal and all your documentation gathering. Plus or minus 4 weeks, but probably right about a month is a safe bet. Okay,
so about the average time that it takes to do a loan. Normally, the same kind of scenario here.
Same kind of scenario, yeah.
Okay, and then also providing the same kind of documentation. Are you guys looking at like debt to income ratios, job history, all of that kind of stuff, including the credit?
Yep, and of course we would do an appraisal to make sure that the loan to value was in check. Again, we'll loan up to 75% of the value.
Okay, and are there any restrictions? Are there circumstances or situations that would for the home itself that would prevent somebody from being able to take advantage of doing a bridge loan?
So we only do it on first or secondary residences, not investment properties. Also, no manufactured or mobile homes.
Okay, all right, that's good to know. Perfect. All right, so are there any other questions about bridge loans that I should have asked that maybe I didn't ask that you guys should tell me?
I think they were great questions, and again, I think it's a really great product for that buyer who needs maybe a little bit of time, or they have a little apprehension about selling their home before they find a home.
Exactly. Okay, perfect. So the second option, if someone isn't able to or doesn't want to take advantage of a bridge loan, might also be a HELOC. Would you agree with that?
Yeah, so the home equity line of credit is another great tool for the buyer, or simply for somebody who wants to, maybe they want to get their home ready to sell, and they need to pull some equity out to do some upgrades, maybe to increase the value of the property. It's another great tool.
Okay, so tell me exactly, obviously a HELOC is the home equity line of credit. So basically they're pulling existing equity out of their existing home, correct? Okay. And so what would be some of the options to consider if somebody wanted to do a HELOC? What does that look like exactly as far as like the amounts that they'll be able to pull out and things like that?
Yeah, so there's some similarities between the bridge and the HELOC. With the HELOC, depending on credit, for somebody who's really strong, will actually go up to 90 or 89.9% loan to value.
Okay.
So a little bit more flexibility there. Typically a little cheaper on closing costs. So for clients that are pulling typically around, I think, trying to think of what the break even, but right around 200,000, 250, anything less than that, provided that they stay in the home for 2 years and they keep that line of credit open, there's no closing costs, which is kind of nice. The only thing that they would potentially have to pay for would be an appraisal.
Okay. So I know that Jen, you had mentioned that with the bridge loan that it had to be a primary or secondary residence. Could not be an investment property. What if somebody wanted to pull out equity from their investment property? Would that be a possibility with a HELOC?
For us, it's not. It still has to be a primary or secondary residence.
Okay, that's good to know. Okay.
Now, some people do take a HELOC to purchase an investment property. They'll use equity from their existing home and use it to purchase an additional property, whether it's for rent or vacation. So that is an opportunity to use it for that. But as far as using it on an investment home, we do not.
And then if you do a HELOC, are you able to still get a mortgage along with your purchase?
Mm-hmm.
Yeah, as long as you qualify for both loans, you certainly could.
And on that point, you know, whoever the lender is, they're going to be looking at the debt to income ratios because you're obviously pulling, if you have an existing mortgage, plus you're pulling out all of your equity, then you would also then need to qualify for the new loan as well, right?
That is correct, yep.
Okay. But in essence, if somebody did want to do that and they wanted to use that as like their down payment, they would be able to do that. And then be able, if they qualify, they'd be able to also get a mortgage on their purchase.
Absolutely.
Okay, perfect. And then the same question as to the bridge loan, what does the time frame look like? So someone from the time they call your office to the time that they get the funds, what does that look like?
Pretty much identical. It could be a little bit quicker because in some cases we wouldn't require a full appraisal. We could do an electronic value on that. So in some cases it's a little bit quicker, but right around that 4-week time frame.
Okay.
And keep in mind with both the bridge loan and the home equity line of credit, there's the right of rescission because it's tied to your residence. So there is a 3 business day right of rescission that we have to wait before we can disperse the funds. So there's always those extra 3 days after closing.
Right. So you literally, like, once you sign the papers, then you have to wait 3 days before those funds are then available to you to be able to use. Yeah. That's a very good and important part of the puzzle right there.
Part of the time frame, yeah.
Absolutely. Awesome. And so what are any other questions that or information that we should know about a home equity line of credit that maybe I haven't asked?
So I did want to mention on credit score on both products, probably your minimum credit score is going to be in the mid 6s, probably is what the cutoff. We don't have a hard line where it's anybody under 675 is not going to get approved.
Okay.
But generally it's in the mid 600s.
Okay.
In order to qualify.
And I know that whenever someone's getting a standard residential loan and they do the credit pull, they're pulling from all 3 credit bureaus. They're tossing out the highest, they're tossing out the lowest, and they use the middle score. Is that what you guys do as well?
No, we pull TransUnion. So now if it's a joint application, we would just take the higher of the 2 credit scores. So that does help when there's, a variance there.
Okay. So there's a little bit more flexibility there and in that regards, it sounds like. Okay. Perfect. Well, I so greatly appreciate your guys' time today because, I think that these are two, I don't want to say they're just not talked about as much. And, if I know that this isn't a perfect circumstance or opportunity for everybody, but I do know that it is an option for some people. And if it can just help, a few people be able to, successfully transition into their next dream home, I would love to be able to, let them know about this option, let them know that you guys are here, you guys are local, and you guys are available as well. So if somebody does want to take advantage of either of these loan products, what is the best way for them to reach out and get a hold of you guys?
So I can give you our telephone number as well as I'll give you each of our email addresses.
Okay, perfect.
Those are probably the two best ways to get a hold of us.
Okay.
Telephone number at the branch is 352-394-3699.
Okay.
And that's for either one of us. And then
Okay.
my email address is Tony, Tony, .burns, BURNS, @seacoastbank.com.
Perfect.
And Jennifer's is going to be JENNIFER .Conroy, CONROY, @seacoastbank.com.
Perfect. We so appreciate your guys' time and everything that you guys contribute to our local community as well. And we look forward to being able to do some business with you guys in the future.
Our pleasure.
Absolutely.
All right. You guys take care.
You too.
You too. Thank you.